Buy now or wait? That's the question prospective homeowners have been struggling to answer in today's housing market. Home prices have been skyrocketing recently, and the Federal Reserve worked to tame inflation, sent mortgage rates soaring too. The combination has led many would-be buyers to pick the wait on the sideline of the equation. Quote from Bankrate. What's up, everybody? Welcome back to another month. And yes, my name is Kenny Simpson. Welcome to the monthly market update. Remember, this is for June, but we look back in May and months prior to the data. Today, we're going to go through mortgage rates, inventory, who's buying, who's selling, is there cracks, what's the hope of rates going down, what is going on in the national real estate market, how this is going to affect you as a home buyer, a home seller. Maybe you have to refinance. Maybe you're just a real estate investor and wondering what's going on, where's the next move. Anyways, I thank you guys for tuning in. Appreciate you guys. A little bit about me. My name is Kenny Simpson. I focus on 1 to 4 unit financing. I'm a mortgage broker by choice. You can reach out to me anytime. I've been doing this 20 years, helped over 5,000 clients, funded $1 billion of loans, and I'm here to help you, educate you. Please go follow me also on Instagram at Kenny B. Simpson. Check out my YouTube channel. Just type in Kenny Simpson Mortgage. A lot of great content there, and glad you're watching this. There's a lot of good data, a lot of information this month because we are jumping into it. And without wasting time, without further ado, let's get into the monthly webinar. Let's see what's going on. It'll be interesting to look month over month because what do we do here? We just look at data. We take a look at data. We give it back to you. We present it. We make sure we know what's going on to keep you informed, to help you make decisions to see, is it the right time to buy a house? Is it the right time to sell your house? When is it going to be a good time to refinance? All these questions that we have as consumers that are in that are homeowners or soon to be homeowners or real estate investors. What every buyer needs to know about home prices. That is the quote I opened up with. That was from Bankrate. Home buyers face the most difficult affordability conditions in 40 years. We know that. We feel it. Home values climb this. Home values, folks, they just keep climbing and climbing. Why is this? Like, what exactly is going on out there? We have no inventory, right? Rates are high. Doesn't make sense, but we have no inventory. There's nothing to buy. And anything that's getting built is building, but they're not building at a mass rate because it makes no sense. So we are just in this really, really weird cycle where mortgage rates are high, affordability is all-time low, people don't want to sell, people are locked in at those low rates, those low prices, and those low payments, because it's three things: low rates, low prices, and low payments. It's not just low rates, it's not just low mortgage payments, it's also a low price. That house they bought today, you might have to pay double to buy it. So that step-up home that person once wanted to buy is no longer a step-up home. It's no longer an option. They're stuck. They're staying. They're getting the line of credit. They're redoing the bathroom, the kitchens, the backyard. They're adding a jacuzzi, maybe adding a pool, paint the house, fix the roof. They're staying there. It doesn't make sense if the mortgage payment is $2,500 and for them to go get a line of credit, it's another $1,000, so they're at $3,500. And like, hey, let's go sell the house, take the equity, buy another one. Now our new payment's $6,000 or something. That's not making sense. It's not going to move the needle. People are not going to do that. As you can see here on this chart, home prices are climbing. Astonishingly, greater than 90% of the country's metro areas experience home price growth despite facing the highest mortgage rates in 2 decades. In the current market, rising prices are the direct result of inefficient housing supply not meeting the full demand. That's your NAR chief economist. With the continued imbalance between supply and demand, home prices are expected to keep rising. We know this. 2024 home price. So percentage appreciation of 6.3 2024. The average is 3%. They're going to go up. Freddie Mac from the below is 0.5. NAR 1.8. Goldman Sachs is 3.8. Fannie Mae is 4.8. How is Freddie Mac and Fannie Mae? My gosh, you guys are so far off. It's crazy, right? Okay, I always like to start with inventory. Guys, inventory, demand, and rates are what makes real estate move or not move or whatever. Commercial real estate is stuck because why? Interest rates are not making any sense and there's not a lot of inventory. If there's a flood of inventory, prices would drop, cap rates would go up just on commercial, and make more sense. But since there's not a lot of inventory, people don't want to sell because they're not going to get their number, and they have probably good financing right now. They're stuck. And with interest rates this high, even on commercial, it doesn't make sense. Residential is really more supply demand because we always have 4 to 5 million people at least, even in these lower recessionary real estate times. We call it the real estate recession because we're not even hitting a 5 million homes are sold in the US. We're hitting about 4 million, but still 4 or 5 million people are actively doing stuff every year. So I always like to start with inventory. Since inventory usually tells the tale, and currently inventory is increasing year over year, but is still well below pre-pandemic levels. Way below, probably 30+% below pre-pandemic levels, depending on where you are. I'm here in San Diego. Pre-pandemic levels, let's say we're coming up to the summer here, we're typically around, 12, 15,000 listings. We're not even at 5,000 here. So we're definitely way under, way under, not 30%. We wish it was 30. It's way under. Inventory rises, but still low. 38.4%, same week in 2023, same week in 2019, negative 35.7. Interesting. That's how far off we are. We're up 38% from same week last year. If you guys are confused about the chart, in 2019, we're down 35%. I guess 35. What do you know without that chart coming up here? Existing inventory, active listings, May of each year. Look at this. Okay, guys, pay attention, right here. Okay, so existing home inventory. Let's go through it. 2017, 1.2 million. 2018, 1.1 million. 2019, 1.1 million. I know it's a little bit more. 2020, 928. 2021, 447. 2022, 479. 2023, 582. 2024, 787. That is for the month. That's the inventory. For the whole country, for 300 plus million people. That's not a lot. Inventory continues to improve. Active monthly listings counts in thousands. You can see the prior years, 21, 22, 23, 24. It is getting better, but still not good enough. Change in inventory. Year over year, May 2024. Here you go. This is what you got year over year. National average 35.2 is up. Let's go back. California 37, Nevada. Dude, who has the highest? Florida's got a lot. Arizona's got a lot. Texas, Nevada's not good. Year over year changes. Okay, so Nevada, South Dakota, not really seeing it. Interesting. Sellers continue to list their homes in higher numbers this May as newly listed homes were 6.2% above last year's levels. While a notable deceleration from last month's 12.2 growth rate, it marks the 7th month of increasing listings activity after a 17-month streak of decline. So we are getting more listings. This is good news. It really is, folks. We're getting more listings, more activity. It's just not enough. In some neighborhoods, in some parts of the country, it's still really, really bad. New listings above last year levels. There you go. You can look back. Why are new listings going up year over year? The lock-in effect is easing a bit as the initial mortgage rate shock recedes in the rear view mirror. And as some sellers come to terms with the fact that their life circumstances have changed and sub 4% mortgages aren't returning anytime soon. Additionally, some newbie investors who piled into the market during the boom are realizing that being a landlord isn't easy. Look, guys, why is it going up? Look, just because somebody has a 2 or 3%, look, people's life changes. They have kids, they get married, they get divorced, they have split ups. They're going to sell an investment property, buy an investment property. Like, people are definitely listing more stuff because people have to do stuff. They realize the rates aren't going to go down. I'm not going to sit here. I got to make a move. I got to sell. I got to trade up. And yeah, people are getting ready to 2.5 or 3% to buy another house because of life circumstances. But they also might have made a ton of equity to sell and go, I'm getting 500 out or $1 million out or whatever, and they're going to put it down the next house. And they realize I'll have the opportunity when rates come down to refinance. So they are looking forward to that down the road. After 2 years of higher mortgage rates, sellers are slowly coming back into the market. Will continue to have gradually more sellers. A lot of quotes. Oh, it's Mike Simonson, Altus Research. 1 in 3 homes on the market today are new construction. 1 in 3 homes are new construction. Think about that. That is insane. Because I live here in San Diego, there is no new construction. Like, it's all older stuff that's just, resell. There's some new construction. So that tells you how much construction is out there. And then the construction, if you're a builder, you can buy down the rate a lot. 2-1 buy down, 3-2-1 buy down, whatever you want to do. So there's options. So if you're buying from a builder, they have incentives where they can really buy down your rate and take advantage of that. The average was 13%. So the average is 13%. So new construction are loving it. They're crushing it because there's just not enough inventory. So look at this chart. It's insane. Wow. It wasn't even this high back in the day. The new home market has been an outsized share of the housing market inventory. So home builders have been able to attract prospective home buyers who are seeing very little supply in the existing market. As we just talked about, home builders are probably winning because there's no inventory. So somebody's selling or buying, they need to go somewhere. Here's some funny quotes. Americans are saying it's the worst time to buy a home ever. Housing market predictions for 2024. When will home prices be affordable again? I hired an agent to sell my home. Do I have to pay the broker's buyer? Americans' opinion of best long-term investment. What do you think? What do you think Americans said is the best long-term investment? Did they say crypto? Did they say bonds, savings, gold, stocks? They said real estate. They only said 3% of crypto, 4% of bonds. Stocks, mutual funds is 22%. So real estate is crushing it because, let's be honest, real estate's done really well. The lock-in effect, the no inventory, prices going up. If you sold a home, if you bought a home, maybe you locked in some good rates, you're cash selling. Real estate is great. Not to mention appreciation, and how you can depreciate it, and and all the other good stuff that comes with the cash flow, the cash out refis that are tax-free. So there's so much stuff. Our research continues to show that the vast majority of prospective home buyers overwhelmingly feel buying a home now or in the future is the best decision for them in the long run. I mean, look, that's just what people think. I can't control people, but I don't disagree. Homeownership has really helped. A lot of people that didn't buy, in 18, 19, 20, and they missed out. They're trying to buy. They're really pissed off. They're emotional. They're like, man, I missed out on a lot of equity, a lot of upside. So, it's obviously if you pay off a home, you can use it, pass it on to kids. You can move out of it. You can rent out rooms. You can do a reverse mortgage to help you in later years, which a lot of people are realizing with the cost of, food and all that other stuff. So there's obviously a lot of options of why it's a good reason. Most homeowners and renters agreed that many of the financial and emotional benefits of homeownership. 89% said that the idea of owning a home brings emotional fulfillment. 67% of prospective home buyers would prefer to own a home for the sense of performance and emotional stability it provides rather than the flexibility of renting. 58% of prospective home buyers said that owning a home is the best long-term decision for them to have control over their own living space. The decision between renting and owning a home is a significant one, impacting your finances, lifestyle, and future. While renting offers flexibility and minimal responsibility for maintenance, owning a house brings a suite of benefits that can have lasting positive effects on your life and your financial well-being. That's true. Benefits of owning a home instead of renting. Lifestyle security and stability, freedom and to customize, community involvement, building equity, tax advantages, stable monthly payments, investment potential, long-term, no landlord dependency, a forced savings plan, and potential for rental income, which is true. Interest rates sure do get a lot of attention. They get the most attention, let's be honest, but they shouldn't be the only part of your home buying decision. It can't be. Because look, your parents, I know, is cheaper. They bought homes and rates are 18, 19, 15, 13%, all that stuff. The refi boom hit when rates hit 9.99, if you guys didn't know. After all, the answer to the question is right now a good time right now a good time to buy a home. Boils down to whether the time is right for you to start your new chapter or to invest in what makes sense. Totally agree with that. Look, guys, if you have to ask the question or ask somebody if it's the right time to buy, maybe it's not. And here's the thing is, if you buy now and you can refi and rates are lower, you're going to win. Unless we have some major market crash, war, economic disaster, then housing's not going to plummet off a cliff. So if you bought a house now, and then you refi, when rates go down in the fives, which they will, mark my word, they will, you're going to pay more for the home, especially places like here in California, other places that have no inventory. You're going to pay more for that home than now because so many buyers are going to come off the market at this 5% rates. There's going to be so much options. There's going to be so much more affordability and so many more buyers, and there's just not going to be enough options for them to buy. 3 reasons owning a home is preferable to renting. Having a sense of privacy and security, 94%. Having a good place for your family, 91%. And having a good place to raise your children, 90%. Our homes offer space to reflect our our taste, ethos, and routines without external judgment. Hanging favorite artwork, surrounding ourselves with favorite colors, and developing layouts reflective of personal lifestyle are always our homes. Offer opportunities for self-expression. That's interior design. So many quotes about owning a home. Okay, let's go through the data real quick to wrap this up. Average days in the market today is about 26%. Back in the day, during the lockdown, the lowest it got to is about 14 days. Existing home sales year over year. US negative 1.9. That means how many homes sold, guys. This is not the values, how many homes sold. Northwest negative 4.0. Midwest negative 1.0. South negative 3.1, and the West is at 1.3. So across the US it's still negative. Existing home sales in thousands. You can see the chart here. How are we comparing to 22, 23, 24? Percentage of distribution by price range. That sweet spot is still 300 to 399. You can see that over a million is really low. From listing to selling, how fast? Total home sales in thousand. There you go. Comparing year over year. I'm letting you guys look through this. Pending home sales. Historical level, there you go. Terrible. Pending home sales, different look. Percentage of distressed properties, we're still looking good, guys. So when you hear foreclosure, short sale, the shit's gonna crash, doom and gloom, oh my gosh. You just look at this chart and you go, wait a minute. That was at 4% prior, and the crash was much higher. That was 2012. It was even worse before that. So we are so low, nothing to worry about over here. Home prices, sales of home prices. The US is up 5.7 year over year. You can look at it. The West is doing well because of inventory. Change in sales. There you go. It is up year over year and down in 250 to 500. But year over year, it's up. Change in home prices. There you go. Year over year change in price. U.S. Home Price Insights, March 2024. The current forecast 3.7. We are beating forecast, my friends. We are beating the forecast. In inventory, it is all blue. National average is 5.7% inventory, month over month. We need more inventory. Months of inventory for sale, it's in the 2 to 3%. Months of inventory for sale for homes since 2019. Look at that. It went way down. Look at that. It went to 1.9, 1.7. Holy smokes. I remember those days back in the day. We're getting more though. We have more. At least we have more. It's better, right? Year over year inventory levels. There you go. New home inventory. Buyer demand. Showing index still remained above pre-pandemic levels. Buyer demand 18 was 156, 19 147, 2020 84.9, 21 was 280, 22 was 251, 23 was 224, 2024 is 180, 1.3. It's still remaining high even with the rates and the negativity and all that stuff. You guys are still on it. Here's a projection for rates. It's funny how this stuff changes, what the predictions were. So that's where you got. I'm not going to make a prediction of rates because I cannot predict the Fed because they keep changing their barometers and what they're looking at. But what I can tell you is the data is in line to show rates are going to come down. The Feds are going to cut because between jobs and inflation and all that stuff and the consumer, things are getting worse. Worse is like the data is getting worse. It's not going, inflation is going sky high and like things that are going to make rates worse. Data is getting worse, which means we're getting closer to a rate cut. That means rates should be getting better. It's just taking forever to get through the $10 trillion, $9 trillion that was put out in the market with all the hiring and this and that. So if you want to know much more, you should definitely check me out. Follow my videos weekly as I put this stuff out. And if you're on my email chain, you're already getting them. Where are they going to go? 6.7, 6.5, 6.4, 6.2. We don't know. This is right. They've changed this 17 different times. So nobody really knows, but rates will. They'll slowly come down. And if they go faster, that means there's something broken in the economy. There you go. Lending standards still under control. They're not even close to the housing bubble. So we are making good loans and, not much to worry about there. Look, guys, if you have a question, hit me up, call me, text me, email me. Love to chat with you. Love to answer questions. And that's it. So thank you so much for watching. Until next month, we will continue to watch rates, inventory, all that. Let's recap from last year. Inventory is up. From last year, rates or whatever. New construction is crushing it. It's one of the highest levels. It's 30% percent of the buyers out there buying new construction. Those are the homes for sale. So the data is changing. We really talked about buying a home and why it's a big deal and why it's important, because people are really down on buying a home. But remember, a lot of people are waiting for rates to hit 5% or 6%, whatever. If you wait, that is fine. If you're looking at a home that's, $300,000 or $500,000 or $700,000 or $1 million and rates go down and you're in a place that has a lot of inventory, maybe you'll be okay. But if you're in a place like San Diego or other markets where there's no inventory and you're looking at a home for $700,000, well, guess what? Yeah, you might have a 7% rate and then you might be able to get a 5% rate. But remember, that $700,000 house, my best case is you're gonna be buying it for $800,000 because of the competition, and people are not gonna sell. That we're just going to have that lock-in effect still there. We will get some increased inventory. It's just not going to be enough. The only way we get massive inventory is a massive job loss recession, which nobody's predicting, but that's it. So if you're looking to buy, if you need help refi, you need advice, you need me to pre-approve, you need me to look over anything, you got to answer any questions, hit me up, make an appointment. Love to talk to you here at the Simpson team. Thank you so much for your time. And look, share this video with somebody. They might need to see it. They need some confidence. Look at the data. Look, everybody's predicting that when rates come down, home prices are still going to go up more. Why? Because we're just not going to get the inventory because of the lock-in effect. Remember, I told you there's lock-in effect. There's three things, right? There is the price they paid for the house, there's the rate they have, and most important, there's the payment. The price they paid, they can't even get today. Some of them can't even afford to buy the same house today, even if the rate was 3%. So people are locked in and they're going to redo the house, remodel it, take a little line out, use the cash they have, and just make it new so they feel like this is a brand new home. They're happy and live there happily ever after. And a lot of people too that are selling their homes, they're buying a new home, are keeping it because the low rate, right, all the equity, and they can cash flow it. So they became instant real estate investors and they go buy that new home and it can offset the payment. So a lot of stuff going out there. If I can help you, educate you, please reach out. Thank you so much. Until next month, be good. Talk to you soon.